Hello and welcome to our market alert video for today, which is November 15, 2024. I am Ken Moraif. I'm the founder and CEO of Retirement Planners of America. And you may notice that I am not wearing my tie today and I'm not in my office. In fact, I am in bed. And the reason I am is because I'm convalescing. I just had my knee replaced 3 days ago. And so my right knee is now all bandaged up and icing. And I'm at home wearing my proud to be a SCWPS shirt, and I'm glad you're with us. For those of you who don't know what SCWPS are, SCWPS is the acronym for Second Childhood Without Parental Supervision. So when a client of ours retires, we call him a SCWPS. We want him to go play, have fun, enjoy, stop bothering me, get out of here, and let us do the worrying for you. So we have a lot to talk about besides my knee, and so far so good, I have to say. And by the way, if I am a little bit loopy, it's because I am on pain meds, so forgive me. But the show must go on, as they say. So as we've been telling you, we thought would happen, inflation actually went back up again. And the Fed's drop of 50 basis points is looking more and more like maybe they panicked, they lowered interest rates too fast. And so now we're seeing the effects of that. And our forecast is that inflation is going to keep going up for the rest of this year. And we probably will see inflation up over 3% by the end of this year. So is this a reason to panic? You know, the bond market right now is giving back a lot of the gains that we enjoyed when people thought interest rates were going to go way down. Well, that's going to abate, and we anticipate that that's going to be given back. However, the market tends to look forward, 6 months or so. And if you look into 6 months from now, our forecast is that inflation will start to trend back down again. So it's going to go up for a little bit and then come back down. And that should bode well for bonds. So there's no reason for us to panic and say we should sell all of our bonds because they're losing money right now. It's just a temporary thing in our view. In the meantime, though, interest rates remain high and we're getting a nice coupon. We're getting nice interest while we're waiting. From the stock standpoint, we've seen a massive rally after the elections. It's being branded the Trump rally. And of course, the market was already very expensive before that happened, and we saw a big rise. And so that rise is some of the steam of that is coming out. And of course, we have to wait and see, who's going to be on the cabinet and what the policies are and all of that. So there's this initial euphoric phase, if you will, with change and optimism. And then when reality sets in, then we'll see what really happens. Our view is that Trump represents lower taxes. He represents lower regulations. That's good for profits. And as you guys know, profits, in our view, drive the stock market. And the stock market, if it goes up, is driving our investments. So for the time being, our view is that stocks and bonds are in good shape. And we don't see any reason to be lightening up. In fact, if you didn't watch our Market Alert video last week, we had our Chief Investment Officer on, Jordan Roach, and he gave, I think, a pretty compelling argument for if you have cash on the sidelines, then maybe now's the time to be thinking about putting that to work. We have a lot of tailwinds pushing the markets forward. So overall, things look pretty good. The important thing always, as you guys know, because we work with people who are over 50, who are retired or retiring soon, the important thing always in our view is to have a defensive mindset. Growth is important, but protection of principal is even more important, especially if you're over 50, retiring soon. If you're within 5 years of your retirement or 5 years of your retirement, if you're in that decade, our belief system is that you should protect what you've got, because if you take a big loss, if we're wrong, the market tanks, we have some big event happen, that could be disastrous for your plans. Our strategy is called Invest and Protect. And it's the one that told us to sell in November of 2007, before the stock market crash of 2008. We were out, we told our clients to stay in cash for all of that, for a year and a half, in fact. And then literally the day before the pandemic, our strategy said to sell as well. It was serendipitous, obviously, but it helped us to avoid the big down that came after the pandemic was announced, and you saw what happened there. So we want to protect your principal. We want to provide you income. We want you to be a SCWPS so you can go and enjoy and have fun and not worry about this stuff. Our website is rpoa.com. Please subscribe to this video. Share it with all of your friends and family. And thank you for letting me be less formal than I normally am for this video. I wish you guys all well, and we'll talk soon.